Welcome, everyone. You're listening to Nephology, the podcast dedicated to crypto, accounting, business, finance, and much, much more. I'm Joe David, the founder of Nephos Group in Minor. Please note that all conversations recorded are professional opinions, and if you'd like to know more or gain support, please reach out to the team directly. Now, on to the next episode.
Hello and welcome to another Nephology podcast, another mini-series where I will be your host, Jamie Nuttall, the crypto tax specialist for Minor, part of the Nephos Group. So today we have the wonderful Robin Thatcher, the Managing Director of By the Books Accountancy, who will be talking through all things crypto and tax with me. Robin, how are you?
I'm good, thank you, Jamie. How are you?
Yeah, it's finally calmed down. I know we had a quick catch up prior to recording, but it's been an absolute manic February, March.
Yeah, definitely. I'm actually still recovering from January as well, to be completely honest. Last week was the first time I've been off since January when I worked. I think I worked 25 days straight at one point. So yeah, it's been a crazy year already.
It's the fun and the joys of being within crypto and tax, I suppose. Robin, tell us a bit about yourself, really. We know you're the managing director of By the Books Accountancy, which has its implications, but tell us a bit more about yourself and why you suit, I guess, the this particular podcast.
So, I mean, you and I have known each other for about 18 months, and in terms of our businesses, we're not. I suppose we're in competition, but we have two very different ways of doing things. So it complements each other nicely. We've always had a close relationship, myself and you. I've known Joe as long as I've known you as well. So it's always worked really well together. So from that perspective, I think it's a very small community we're in of crypto accountants, and it's really nice to be able to bounce ideas off each other, talk to each other from that point of view. In terms of my background, I started off my own company by the Book Accountancy about 2.5 years ago. Came from frustration of being in centralized finance in FTSE companies, as well as seeing small businesses and how accountants run things. Very old school accountants run things a certain way, and I felt that there's a modern twist that we can put on it. I know you and I are from similar backgrounds. I think so much comes from being able to talk to people in a proper way. And I think that was lost in old school accountancy. So, my business bore from there. And then through my own love of cryptocurrency, if you like, and a passion that it's going to succeed, I think it's something that the world needs. I sort of got into the tax side of things and realized there's not much that goes on in the tax side of things. A lot of what I'd call traditional accountants don't touch it, or if they do, they give real bad advice on it. So from there, it started off from helping people, and it's just gone to the level where now I can use it as part of my job, which is really good. I created a website that is just a landing page, but it's cryptotaxhelp.co.uk, and that was just for people to book calls and be able to talk about the tax side of things openly without knowing if it was right or wrong from what their accountants had told them or what was already existing. That was how I came to where I am, really.
It's nice to see people in a very similar boat, like you've mentioned. We have a similar background, similar upbringing, and whatnot, and even little things like you've just mentioned, how you're trying to help people without the repercussions of them wondering, oh, are you going to report me if I'm asking something wrong or dodgy? I'm in the exact same boat, and I'm a strong believer that we should be talking openly with everyone about this, because they might say, oh, expenses, am I allowed to put them through? Is that a bit naughty? Well, no, expenses are perfectly fine to put through the books. It depends what they are, obviously. But to us, we go, well, of course you can put your work monitor through your books, for example, but they might think, oh, can I? Is that illegal? You just don't know until you ask. So yeah, definitely in the same boat there, Robin. So for our listeners, we'll be going through a 3-part mini series where we'll be dissecting crypto taxes from the very beginning, starting at, is it taxable, all the way through to, hopefully, at the end of the third series, talking about some tax planning opportunities, which we have both banged on about for the last couple of months, haven't we, Robin?
We have, definitely. I feel like a broken record.
It's all good, though. It's all good. We do give to the community where possible. So, Robin, I suppose the first question is, around crypto and taxation. Is it actually taxable?
Yeah, well, as you know, and I'll say that probably to every answer you give me because I know you know the answer, but ultimately, yeah, it is taxable. HMRC released the crypto assets manual, which sort of details that it's its own asset class as a crypto asset, but they treat it in a certain way. Depending on the project, coin, type of way of receipt of it, it is taxable in multiple different ways, mainly across income tax and capital gains tax.
Yeah, so I've again, we're probably delving in too deep already with my next question. But I just want to know what your opinions are on the regimes itself. So to start off with, I guess, Robin, what regimes do crypto assets come under in terms of taxability?
So the main two would be capital gains tax and income tax. I can't think of there's probably other things that I'm not factoring in my head that would fall under different things, but the main two would be capital gains and income tax. In terms of the regimes themselves, it's one of those where I go, how long have we got? I could talk about the treatment and the way it's written and the way it goes till kingdom come, but high level, the main buying and selling, if you like, falls into capital gains, which would be 75% of crypto investors, generally speaking, and then you start going into income tax when you start talking about airdrops, which has its own case that I'm sure we'll open at some point.
That's episode 3.
Yeah, and then staking and income tax from that side. But the way I will always work with things, Jamie, is I have a very simple brain. I'm not trying to do myself any injustice there. My brain works a certain way, so I'll break things down as simply as I can. I always say to people, going back to what you mentioned earlier, I try and say what I would do if I was in their position. But the key thing about any sort of tax really is there's no necessary black and white. We try and break down what HMRC tells us into digestible language that means that we can apply those rules. So when you talk about expenses, it's about wholly and exclusivity. But then we can then break that down further. So in terms of the regimes themselves, I try and split them out. Capital gains is obviously the most common one if you're buying and selling, but then there's so many complexities that come into it, which is where really you and I come into being useful for people.
So going from there to the more complicated area I was foreshadowing, um, I personally have been talking to some people about the idea of a third regime, a call it a digital assets regime, whereby everything within the crypto space would be under one regime. Whatever the tax rates are, I don't know. Not that far in my thought process yet. But it allows for situations where you've made a huge income tax bill and then it's fallen in value. So you've got a huge capital loss and you can't offset one against the other. Do you have any thoughts on that sort of like third regime where we bung them all together, perhaps?
I think I've got to be honest. It's not something I've ever considered because I don't in my head, and having dealt with HMRC for 15 years, and you're probably in the same way. I don't think they ever think that sensibly, and that's not me trying to badmouth them. I think that's down to a lack of education. Maybe if we were talking about this in 15 years' time, I could see that happening. But right now, I don't see it happening. But I think it's a great idea. Because it makes, as you and I will have seen over the last year, the bear market hit at the absolute worst time for every investor possible. It was straight into a new tax year, so all the gains from the prior year were taxable. And as you rightly pointed out, if they made a large income tax bill, but then a capital loss when the market dumped 60%, they were in a position where they didn't have the money to pay the tax bill that was coming their way, or they were liquidated. I think it makes sense. I would like to think that now you've said that, in my head, the way my head goes, now they're separating it out on the tax return going forward. Maybe it's a logical step to take. I think that from what Rishi Sunak said about making the UK a crypto tax hub, a crypto hub, not tax hub, but a crypto hub, it would make perfect sense because then you can increase the tax-free allowances back up for something like crypto and potentially push people into the investment side that you're looking for. And make it so that the UK is a place where people want to come as a crypto investor and want to be taxed because they've got a good tax-free amount. potentially they can offset their income tax losses against the capital gain made on crypto only. For me, it works quite simply, rather than the complex capital gain system that's already there. Trying to split it out and make different rules for different asset classes just becomes impossible.
That's a good point you mentioned, actually, because with income tax, you got the personal allowance, which was £12,570 tax free, and then the capital gains tax, you got the annual exemption, which was 12,300.
It was, yeah.
That's gone down now, hasn't it, Robin?
It's down now to 6,000, yeah.
6,000. So if we're talking about this sort of make-believe third regime, they could have a, call it a digital assets regime. They could have a digital assets threshold of X amount, 10,000, whatever is tax free, to kind of go on top of there. But yeah, possibly too much for the first episode. But I just wanted to get your genuine opinion, because I didn't warm you up to that question at all beforehand. So I just wanted your genuine reaction to it. It sounds like it's something that could happen, and who knows.
With the right people in the right places, it's a suggestion. If I was in the right place, I'd put forward, because if the Prime Minister is actually as passionate as he says about these sorts of things, it creates a market that allows him to do the things he wants to do without, cutting his nose off to spite his face in terms of the capital gains. I recently put his tax returns up, and I saw that most of his income is capital gains. So, from that point of view, it makes perfect sense to separate out and do what he wants to do, which is make this country a crypto hub that encourages investment in it, as we go forward into what will be inevitably, in my opinion, a bigger market.
Yeah, it'd be interesting to see where they go with that. With all things sort of crypto hubby and stuff like that, I suppose security has to be at the forefront of our minds as investors and as a sort of country, I guess. Do you have any comments around crypto and security at all?
I do. I mean, I'm really passionate about crypto, and the fact it has to be it has to have regulation, but also part of crypto is that the non-regulation helps it. So it is a very much a catch-22, and I don't have the answer for that. If I did, I'd get paid a lot more than I do. But I do feel very passionately that things like the FTX scandal, the Terra Luna scandal,
Celsius.
Yeah, exactly. When you couple all of these together, or add all of them together, crypto's the Wild West. I was in a position where obviously before the bear market hit, my assets were a lot more than they are now. And I was heavily considering investing in Anchor Protocol because it was 20% and you could insure it. You could insure it to get 17.5% returns. And to me, that was brilliant. And at the same time, never did it cross my mind that such a thing could happen where it would just simply disappear, and what happened. And I think that taught me a massive lesson. And I think it's happened so many times since then that we almost feel now that no one can escape the possibility that anything can happen. After FTX, a lot of people lost a lot of money. I don't know, I think there was something on crypto.com for a while where they moved some money and it created a mass panic.
I was one of those panicking, not gonna lie.
Well, I remember at that point when that happened, there was some rumors about Binance, and suddenly it was like, oh my God, Binance is going to go. And what the rumor mill happens in crypto, it happens so fast. And I've always said that I would be one of the last people to know. And that sort of happened, the same. It happened recently with USDC. I held a lot of USDC, and suddenly over a weekend when Credit Suisse collapsed, it went down to 0.89 per USDC, and that was unfathomable. And then I took a 10% loss on some of it because I didn't know what was going to happen.
Yeah.
These sort of things are the things that, in my mind, we need to eradicate in order to make it a more secure asset class for investors, because it's a bit like the Wild West out there, and anyone can do anything. I've been involved in a lot of projects where there've been genuine people at the helm, but I've also been involved or seen a lot of projects where disingenuine people have been there. Money changes people as well. That's one thing I'll always say. You can have the most open and honest owner of a coin or a project that, you know, they might be fully transparent one minute, it takes £1 million in their bank to change that, and they suddenly think, I've got a choice, either walk away a millionaire or I give it all back, and they never give it all back. So I think there's a lot of work to be done around those points. But yeah, I mean, you and I both think it's a great thing, right? So, you know, we're in that position where we're passionate about it, but I just think there's so much to improve, and I wish I had the answers, and I wish I felt that someone had the answers.
Yeah.
I just don't think they're there yet.
Yeah, I think you touched upon regulation right at the start, and that's probably the key word with security is the topic of regulation. Whether you stand on one side of the fence or the other, is kind of irrelevant. The fact that we're all thinking about it is important. You mentioned FTX, and there's lots of talk about proof of reserve, things like that. So FTX was a centralized financial exchange. I'm sure many people know that. It existed and then now doesn't exist. Personally, I think it's a failure from a business perspective. It's nothing to do with crypto. The assets they held could have been in fiat. The same thing would have happened. It's a failure of business rather than a failure of crypto, to be honest with you. And then with the regulatory side of things, I think it's difficult to place a line as to where that's enough regulation, because when you're talking about regulating, say, centralized or decentralized financing, you'd think there'll be two different lines, and they probably are, but you're also pivoting regulation against innovation. The more regulation, the less innovation. Less regulation, the more innovation in most cases. So it's both need to coincide with the other and exist with the other. I think long term for this to really push forth and go forward with the next step within the crypto space, to be honest with you. I'm more, you and me are both more of a crypto tax person and accounting than we are crypto itself, but we have a huge stake in crypto and we both invest in it. I don't know about you, but I know as a firm we accept crypto as payment, for example.
Yeah, I do too.
So obviously we've got some holding of crypto within our own businesses, and it's a bit crazy to think that we weren't in a position to care, if that makes sense, where it really matters. So going off from security as well, I've been told by a colleague of mine, Ethan, who is our crypto specialist. He is like the guru on the blockchain. He's told me that I need to get a ledger and I need to start using it, because I'm not ashamed to say that I think 80% of my savings are in crypto, like my liquid savings. And about 95% of that are on an exchange, a centralized exchange for that matter. He thinks that's a ridiculous idea, and it should be in a ledger. Do you have any comments on that, Robin?
Yeah, so I all mine is off exchanges. I literally I use them for off ramps effectively. So from that perspective, but that's more to do with what I said earlier, that when the rumors, you know, started around, I'm forgetting in my head exactly what happened, but there was, you know, going back to the previous point, there was some transparency issues with what crypto.com seemed to be doing, and they seemed to send money to actually cover where their assets were elsewhere, and it just felt like there was a lack of transparency about what was happening. So I moved all money away at that point because there was rumors that Binance were going to go. Those rumors started adding weight in terms of people withdrawing money. You'll know as well as anyone that if we all went to exchanges tomorrow and withdrew all our money, they wouldn't cope. They wouldn't be able to have that liquid available.
Same thing for a bank, though. It's the exact same thing for a bank. I don't know where this expectation has come from.
And I'm not saying it is an expectation, but that worried me enough to say that I think a bank collapsing is obviously a bigger thing than a crypto exchange collapsing. You know, Binance, I can't speak for China, but the you know, if Binance collapsed, it would be potentially people could disappear a lot easier than if a bank collapsed in the UK, and that always worries me. However, from a security perspective, that's a personal preference, I think. I would encourage anyone to have a hard wallet. I think you and I discussed this, and I don't mind being open with it. I've got 3 hard wallets upstairs. I use none of them. But I went through a hack myself. It was easily done. It was a naive thing from me. I'm not afraid to say I went on, I think it was Wallet Connect at the time. It was back when strong nodes were a thing, and I effectively had a strong NFT that I purchased. It wouldn't connect to my nodes at the time. I spoke to strong support, quotation marks there,
Ah,
and they put me to Wallet Connect. And when I went to Wallet Connect, the website was one letter off, right? And I didn't pick up on it. I even typed it into Google to make sure it was a real thing, but you somehow managed to be stupid and use their website. And obviously, when that connected my MetaMask, it failed. It asked me for my seed phrase. I did it like an idiot. I was actually on the phone at the time, not concentrating. I did it. MetaMask compromised, gone. Now, obviously, had I had a hard wallet, I could have saved some of my stuff. It was a hard lesson. It made me feel sick at the time, but ultimately it was a lesson learned. But for me, that increased the need for security, because now I didn't know what was on my computer. I didn't know what they were able to access or what they weren't, or my mobile phone. Like, now I won't use MetaMask on my mobile phone at all, just for a security thing. I have multiple different accounts with different seed phrases, and I don't use a hard wallet, and I should. But I don't have a mass amount of assets for me to say, all my savings is not in crypto anymore. I moved a lot of it away in the recent spike. I decided to, I wouldn't say cash in. I decided to dispose of some for the little gain that I could get, and then I'll consider buying back when I think there's an inevitable dip coming up. I'm not a trader, and I'm probably totally wrong. So, please don't listen to me. And I'd always say do the opposite of what I say, because not only is it not financial advice, it's probably bad advice. When it comes to investing, anyway, I'm always late to the party. Trust me.
you and me both. You and me both.
Yeah,
So, you, I mean, it goes. I didn't know this story. I didn't know you'd lost that much money. But it goes to show that although we are tax and accounts first, we are in the trenches.
yep,
Much to the firm's dismay, I refer to myself as one of the crypto degens, because I'm in the trenches. I'm giving it a go. I'm doing what I want to do. I'm partaking in protocols of all sorts. I've also lost, not through scam. Well, depends how you see play to earn gaming platforms, I guess. But I've lost a fair chunk of my portfolio, probably about 40%, through things like, have you heard of Axie Infinity, for
yep,
example? Yep, lost a load of money there. What was the other one? Pegasus.
yep.
Yeah, that was another one, and I'm still in Splinterlands at the moment, keeping everything crossed that it comes back. Um, but yeah, so I suppose what I'm saying is, both you and I, Robin, we're not we're not accountants who go, yeah, we can deal with crypto. We are accountants who literally have a personal investment and personal stake in all things crypto, I guess.
Yeah, but I mean, I couldn't fathom doing what I do and helping people the way I do without having that understanding, because ultimately there's so many complexities in it when you talk about smart contracts and things like that. I don't know about you. I mean, I've done legal papers, but I've never really been involved in legal and reading contracts and things like that. So the key for me was I understand the project enough to know what the smart contract's telling me. And I think that level of, like you say, being in the trenches helps us, because someone can tell me a project, and in my head I can relate it to something that I've probably done somewhere, which makes me understand a little bit more the tax treatment once they give me a 20-second bio of it. So yeah, it's great. I mean, I wish I made money off it, but I honestly don't. I'm always late to the party.
You and me both. I think I heard about Strong about a month before its collapse. That's how late I was to the party from that. But it's one of those things, really. You can't keep an eye on all things crypto and tax and accounting, and you're a managing director of a firm. You've got other things to do as well. This isn't your full-time job. So um I get often asked, oh, do you get the inside scoop from clients? And the answer is, well, yes, they tell me exactly what to invest in. However, it doesn't mean they're right or wrong necessarily. It's just their opinions on the matter, and they might have got it right or wrong before, and they might get it right or wrong going forward. But I never listen to anyone, no matter who they are, as to what to invest in without doing my own research. DYOR.
Yeah, I agree with that. One of the things I've found as well is I could get 10 tips off different, of different coins off different clients, and if only one of them 10x's and the others all fail, I'm still going to be back where I started anyway. So I can't invest in everything that someone tells me, and ultimately it can be a bit of a shot in the dark. Someone can be really, really passionate about a project, but then ultimately that fails, and you're not going to go back to them and go, "That's your fault."
Exactly. It compromises your relationship with your own client. So, if there's any clients listening, we appreciate it very much. And I would encourage you to continue to help us with our personal investments and how you think we should be running our portfolio. But we politely decline. Because
Generally speaking, I'll only ever invest what I can afford to lose anyway. That's a philosophy of mine since going through a hack. If it goes, I'm not going to lose sleep over it. So yeah, it's a case of if I want to try it and I do my research, I'll give it a try. But ultimately, I'm happy to lose everything.
yeah, yeah, that's a very similar mantra to me, and I'm sure many people. Invest what you can afford to lose effectively. Um, okay, so in terms of this first episode, really, we're just trying to get a feel of you and I, and a feel of what the regimes are, etc. I know we wanted to talk about the a very simple concept, I guess, or something I wanted to talk about of proceeds in the crypto space with HMRC. Um, so, Robin, let's start with why the proceeds figure is so important. What makes that a prominent figure that we need in terms of calculating our income tax? Because it's the tax is on the gains, but why do we need to know about the proceeds?
Well, if you were thinking about a business, it's like equivalent of turnover. So you would, when we talk about VAT registration for a business, it's not 85k profit, it's 85k turnover. So your proceeds is very similar to turnover. If you think about HMRC and the history, they've not dealt with crypto assets for a long time. This might go back to the conversation we had about a different tax regime. They treat it as if they do every other type of asset, which is four times at the moment that the allowance is four times your annual allowance, so four times 12.3k, which is 49.2, I think,
Yeah.
before you're meant to declare. Now that's because normally if you're turning over 49.2k or over 50k for simplicity, you're quite an extensive trader in whatever you're trading. Whereas in cryptocurrency, you could go to Uniswap and you could swap 10,000 US dollars for another coin, and it could go through two different channels, and suddenly your proceeds are 30k when you've done in your head you've done one transaction, but
Yep.
according to the blockchain you've done three, and that's 30k of proceeds. So it's really important to factor that in because. And I'm not going to take credit for this because you said it before the conversation started. But when you look at your proceeds on your tax report, wherever that may be, you might see 5 million as a figure and think, well, hang on, I haven't done 5 million quid here. But
I've
you
never
actually
seen anywhere near that amount. What's going on?
exactly, but you have, and it's just the way that crypto assets fall into the tax regime that already exists. So it's not one to panic over. What we want to worry over, and I'll always say this to any client, is worry about your gains. As long as your proceeds and costs work out the right gains that you were expecting in your head, the probability is that they're right or they're in the right area. So that's the key for me. Don't get stuck up on your proceeds. I always go revenues vanity, profits sanity. It's saying your proceeds are vanity and your net gains are the sanity.
I've never heard that before. I should
Really?
surprisingly never heard that, so I'll have to take heed definitely.
Oh, definitely. Always. I always quote that to clients because the amount of clients that will tell me I'm at so much revenue, and I say it's the profit that matters, not your revenue, because you're taxed on your profit. So
I'll try remember that. So going back to the proceeds thing, yeah, I think it's vital for people to know and for HMRC to understand, um, to save themselves potentially looking into clients with high proceeds and going, hold on, you've got 5 million proceeds, but you've also got 4.9 million costs. You've only got £100,000 worth of gains. That's a very small proportion of your proceeds. What's going on here? They need to understand exactly as you said, Robin. You can make multiple trades. In your very simple explanation, imagine that on a more realistic scenario where you've got multiple chains, multiple exchanges, multiple transactions, multiple interactions, and interoperability into consideration. Um, it's going to rack up that number very, very, very fast, where it becomes a bit of a problem. So, I suppose the other thing we should really touch on before we sign off for this particular first episode, anyway, is why HMRC care about proceeds. Is there another threshold that we need to be keeping an eye on?
I think you're leading me with a question there, but I've not got what you're leading me to. Are you talking about the 49.2k that I talked about? Okay, that's fine. Yeah. So I'm like I say, my head works really simply. So sorry about that, Jamie. I appreciate the nudge.
Mate, you and me, but honestly, I speak in layman's terms all the time. It's just easier.
Yeah. So ultimately, what HMRC say, and you and I had a discussion about this beforehand. So HMRC will say that if you turn over or your proceeds total 4 times your annual exemption allowance, so 4 times 12.3k, which comes to 49.2k, you are meant to declare, regardless of whether you've made a taxable gain or not. Me and Jamie had this discussion beforehand. My approach before having conversations was, I used to tell people they need to declare. Now, ultimately, if and this is Jamie's words, not necessarily mine, so I'm not taking credit here, but if you are in a position where you need to file a tax return anyway, it makes sense to add that on. I would have done that anyway. I think in the past I've not made taxable gains, but I've always filed it on my tax return, especially if you've got losses, because you can carry them forward. So that's
definitely, yeah, definitely. There would be no situation where I wouldn't be filing for losses.
Exactly. So the other scenario though is you've got a small amount of gains, 2-3k, and you don't have to pay tax on them. Ultimately, if you don't have to file a tax return anyway, I probably wouldn't file it. It's going to be an extra cost that you pay an accountant to do it. The cost of the software that you've already got, because you have to pay for tax reports potentially, things like that.
It seems to become unreasonable.
Yeah.
And again, I know we're paraphrasing here, but I just want to make sure I've got both Robin's back and my own here. Make sure you liaise with HMRC and just check with them. It is likely that they turn around and say, don't bother, but technically speaking, you have a duty to report it, even if you are not registered with HMRC. But it's one of those things, isn't it, Robin? You have a duty of care to HMRC to be an agent of, if you like, but you've also got a duty of care to the client and go, look, can you justify X amount of cost for a bit of peace of mind? I guess it is up to the client at the end of the day, but it's a tough one. It's a tough one.
It is a tough one, but what I'd add to that is you've also got to I'll be completely open and honest. You've always got to factor the accountancy costs in that, because you're probably going to want an accountant to do it. So you've got the cost of a license on the tax software. Let's say that's £100. And then I'm not gonna quote an accountancy fee, because they vary so much based on transaction numbers, etc. But the spectrum can be anywhere from a few £100 to a couple of grand, depending on how much you're doing. So if you've got all of that to factor in, if you've made £2,500 gains and it's going to cost you £2,000 to file your taxes, there's got to be a bit of common sense in there. So yeah, James, absolutely right. Speak to HMRC, but you can. I always say to people, the one thing about HMRC is if you call them, you keep a record of who you spoke to, the date and the time. They are very reasonable with what they actually do at the end of the phone. They will put payment plans in place for people. As long as you don't bury your head in the sand and try and ignore them, they don't mind. The thing that really gets their back up is when people ignore them, and they have processes internally to attack those people. They will attack those people, and I think that's the right word. They have automatic letter systems that will go out, issue fines, penalties, and then they go to debt collectors automatically. So as long as you're open and honest with them, 95% of the time they'll just go, yeah, no problem, don't worry about it, we'll cancel your record for that year. And it can be that simple.
Yeah, and I think you and I are very open with our communication and honest with what we say and what we do. So I think open communication all around in the space is a wonderful idea, especially with HMRC. But I'm sure we can probably do another episode all around how to deal with HMRC and sort of demystifying the horrible concept of the tax man and giving them a call and all that. But no. Okay, so let me just wrap up here, Robin. We've gone through, is it taxable? We've gone through the different regimes, income tax and capital gains tax, and how sometimes it's one and sometimes it's the other. We've gone through a bit about security, talked talked about regulation and innovation. We talked about the proceeds issue, which is so common. I think I get asked once a week maybe about the proceeds situation, which is fine. And that's pretty much it for this episode. And any final thoughts or comments, Robin?
No, I think we delved quite deeply into that actually for level 1. So I'm curious to see how level 2 and 3 go. Definitely.
Well, level 2 will be on the practicalities of it, I guess. So episode 2 will be us, I suppose, revealing our top secret tips and how we go about it and how we actually make things happen from an accountancy perspective.
Sounds good. I'm looking forward to it.
Excellent. Well, thank you for joining us, Robin. So that's Robin Thatcher from By the Books Accountancy. I've been your host today, Jamie Nuttall of Nephos and Minor, and we hopefully will hear from you, or you'll hear from us, should I say, next time. Thank you.
Thanks.